Namaskar, and welcome to the new podcast of Tax Concepts with Dr. Pushpender Puniha. In today's podcast, we shall be discussing the newly introduced concept of updated return. This has been introduced by the Finance Act 2022. We already had in the Income Tax Act a provision for filing a belated return or a revised return. What is it that prompted the legislature to come up with a new concept of updated return, which provides a much longer period to a taxpayer to file a modified return, or what they call the updated return? Now let's quickly go through the motivation and the background which prompted the legislature to take this decision, because I believe that if we understand this background, then it is so much easier to have the correct interpretation of what is there in the updated return, in what circumstances the updated returns can be filed, and why the legislature in certain circumstances has not given this option to the taxpayer to file an updated return. Now, let's go to the existing provision. The existing provision lay that where an assessee does not file a return of income before the due date under section 139(1), then he can file a belated return under section 139(4). Or if a taxpayer commits an error or there is an omission in the return of income, he can file a revised return of income under section 139(5) of the Act. The belated or the revised return can be furnished anytime, 3 months before the expiry of the relevant assessment year or before the completion of the assessment, whichever is earlier. Now, the memorandum explaining the Finance Bill of 2022 lays down the reasons why updated return has been brought into the statutes. Now, the memorandum states that the timeline for filing a revised or a belated return may not be adequate in certain circumstances when one factors in utilization of huge information and data available, as well as they talk of coupled with the nudge approach that motivates the taxpayer toward the desired objective of voluntary tax compliance, starting with filing of correct tax returns. And then the memorandum goes on to say that it is for this reason that it is proposed to introduce a new provision in the Act for an updated return. The idea is that the updated return would, on one hand, bring use of the huge data available with the Income Tax Department and shared with the taxpayer to a logical conclusion, resulting in additional revenue realization on one hand, and it will facilitate compliance by taxpayers in a litigation-free environment. Now, there is a huge academic and research which lies under the motivation for introduction of the updated return. And I would recommend those of you who are interested in it to read two wonderful books on this topic. The first is Daniel Kahneman's Thinking Fast and Thinking Slow. And the second book is Nudge, Improving Decisions About Health, Wealth and Happiness. And it is written by Richard Thaler and Kay Sunstein. Let me tell you that both Daniel Kahneman and Richard Thaler have won Nobel Prize in Economics for these two books, or their research which underlies these two books. Now, what does the Richard Thaler and Daniel Kahneman tell us? They say that there is a two-way of decision making which exists in our brain. One is an automatic system, like a rule of thumb, which is based on intuition, which is based on instinct, and it is a rapid-fire decision-making thing, where without considering all the pros and cons of a situation, we take decisions. And nearly 80% of our decisions in life are made by these thumb rules, by our intuition, by the heuristics which we have developed over the time period. The second part of our brain is what is called the reflective system. It is that deliberative part of the brain where we consciously take into account all options, all data, all information, logically and rationally look at the options and the pros and cons of our decision, and then take a decision. And the important part is, and that is why Daniel Kahneman and Richard Thaler are called the founders of the behavioral economics. They say that it is possible to devise policies and incentives where anyone can be nudged, can be prodded, can be tapped or pushed to do the right thing. The idea is to devise incentives and to give motivation to people to do the right thing. And what is that motivation which lies under the updated return? That, okay, you took a rapid decision, you took maybe a risk which you now on reflection consider was not the right thing to do, then let us by policy, let us by a particular amendment in the Income Tax Act, incentivize you to take the correct decision now. That is the reason why 24 months of time period has been given to the taxpayers to file their updated return, so they can process all the information which is available with them, they can reflect on it, they can consider on it, and the legislature is now providing you an incentive to come up with the right return of income, the correct return of income. And what are those incentives? That, okay, if you will file the updated return, you will not be penalized, you will not be facing criminal prosecution. But yes, you did commit a mistake, so there will be a cost on you, which is in terms of those 25% or 50% of extra tax, which you will be asked to pay. This extra tax which you pay is to ensure that there is a level playing field, and we do appreciate those persons who filed the correct tax returns to begin with. Now let us consider specific issues under the updated return provisions of the Finance Act 2022. Now the first question is, who can file the updated return? The opening paragraph of section 139(8)(a) use the word, a person may furnish an updated return. Thus, the filing of the updated return is an option given to the taxpayer. It fits in with the nudge approach as we discussed. Incentives are laid out, and you may opt to take advantage of those, or you may not opt to. So the filing of the updated tax return is an option supported by the incentives. Now, an updated return may be filed by any person. Thus, the person filing an updated return it may be a person as defined under section 231 of the Act, that is a company, a firm, a LLP, a trust, or an AOP, or any other person who is stated in the definition under the Income Tax Act. He may be a resident or a non-resident, and he may be liable to pay tax on his income or income of any other person in a representative capacity, or where the income is required to be clubbed with his income. Now, can an updated return be filed by a person covered under section 139(4)(a) to subsection 4(f)? These are the specific provision for political parties and trusts to file their return. So, as per the respective subsections 4(a) to 4(f) of section 139, such returns are to be treated as if it were a return that is required to be furnished under section 139(1) of the Act. Thus, logically, it follows that the option to file an updated return is also available to those filing tax returns under subsections 4(a) to 4(f) of the section 139. You may wonder under what circumstances a political party will run the risk of filing an updated return, but the option does exist. Now, can a return filed under subsection 3 of section 139, which is a return of loss, be updated? This has also been clarified in the fourth proviso to section 139(8)(a). It provides that where a person has furnished a return of loss under section 139(3), he can furnish an updated return, but such an updated return should be a return of income. The updated return cannot be a return of loss. This point needs to be emphasized. You may have filed an original return, which is a return of loss, but you can update your return only if it is now a return of income, but not a return of loss. An example will clarify this position. If a person had filed a return of loss under 139(3) to carry forward a loss of 10 lakhs under the head business of profession, now he wants to disclose additional business income of rupees 8 lakhs in the updated return. He cannot file an updated return in this case, as after adjustment of carried forward business loss against the additional business income, a loss of rupees 2 lakhs remains, and an updated return cannot be a return of loss. However, if the additional business income is more than rupees 10 lakhs, then he can file the updated return as after adjustment of carried forward loss against the additional business income. The updated return will be a return of income and not a return of loss. Now let's consider what is the time limit for filing the updated return. The provision of updated return is effective from 1st of April 2022, and the time limit provided for filing an updated return is 24 months from the end of the relevant assessment year. So in the financial year 22-23, a person can file an updated return for assessment year 2020 and 21, as well as for assessment year 2021 and 22. Now, a related issue is, can an updated return be revised? In the third proviso to section 139(8)(a), it is provided that an updated return cannot be filed if the assessee has already filed an updated return for any particular assessment year. Thus, in simple words, an updated return cannot be revised. A related question is that, can an application be filed under section 119 for condonation of delay for filing the updated return? Now, section 119(2)(a) of the Act empowers the CBDT to relax the provision of certain sections of the Act, and that includes section 139, for the purposes of proper and efficient management of the work of assessment as well as collection of revenue. The provisions can be relaxed by issuing a general or a specific order, and this is an important clause now, of any class of incomes or class of cases. Now, in the two cases which I am highlighting, in the Union Home Products versus Union of India, reported at 84 Taxmann 303 Karnataka, and in Santlal versus Union of India, 89 Taxmann 272 Punjab and Haryana High Court, it has been held that the class of persons or the class of cases does not mean that individual cases of hardship could not be brought to the notice to the board by the assessee. But the condonation of the delay is possible not for one single case, because then it will be like seeking a particular favor, but the condonation of delay by an individual taxpayer for an updated return can also be filed if it is for typology of cases that fall either in a class of income or class of cases. So I could be highlighting one instance which falls in a class of income or class of cases. So the short point to remember is, if you're asking for a condonation of delay in filing an updated return, make sure that your application may be filed by you individually, must contain information that satisfies the CBDT that you represent a typology which represents a class of income or class of cases. Only in those circumstances, the condonation of delay in filing the updated return can be considered. Now, the other issue which we need to consider is, can there be a setup of current year and carried forward losses or depreciation in updated return? Two scenarios, according to me, can clarify a lot of issues and confusions which are there on this issue. In the first hypothetical case, Mr. A, a salaried person, filed his return of income for the assessment year 2021-22 before the due date specified under section 139(1), and he declared a total income of rupees 10 lakhs. Subsequently, he noticed that he had failed to disclose in his return of income a long-term capital gain of rupees 10 lakhs on which tax is computed under section 112A. In the same year, he also suffered a short-term capital loss of rupees 2 lakhs on which tax is all computed under section 111A. Now he wants to file an updated return. Can he do that? Now, Mr. A had earned a long-term capital gain of rupees 10 lakhs and suffered a short-term capital loss of rupees 2 lakh. As per section 70, the short-term capital loss can be set off against the long-term capital gain. Thus, the net income chargeable to tax under the capital gains head would be rupees 8 lakhs. If he discloses this additional capital gains income in an updated return, then his total income would be rupees 18 lakh, returning in an increased tax liability. So he very much falls within the provisions of updated return. Let us analyze another scenario to clarify the issue of carry forward of unabsorbed business losses or depreciation in an updated return. Mr. X, a trader, suffered a business loss of rupees 5 lakhs. Rupees 2 lakh was on account of unabsorbed depreciation, and balance 3 lakhs is the normal business loss of his in the financial year 2020. He had also earned income from gambling activities of rupees 10 lakh in the same year. Mr. A did not file the return of income for the said year. Now he wants to file an updated return. What will be the treatment of the business loss at the time of furnishing of updated return? In the given case, Mr. A had only income from gambling activities. The income from gambling activities is charged to tax at the rate of 30% on gross basis. Thus, no loss is allowed to be set off against such income, and the same shall be required to be carried forward to subsequent year. However, as Mr. A had not filed the original return earlier, the normal business loss of rupees 3 lakh shall not be allowed to be carried forward. But he may be able to carry forward the unabsorbed depreciation of rupees 2 lakhs. Herein, I draw support from the judgment of the Honorable Supreme Court in Nectar Beverages Private Limited versus DCIT. It's a 2009 judgment reported at 182 Taxmann 319, wherein the Supreme Court has held that in its very nature, depreciation is neither a loss nor an expenditure nor a trading liability. Where the profit and gains from business or profession fall short of depreciation, the amount of depreciation that remains unadjusted is called unabsorbed depreciation, and it is not a loss. Thus, an updated return may be allowed to be filed if it is a return with unabsorbed depreciation, provided, and that is important, provided that other requirements prescribed under section 139A are fulfilled, and such a return should not result in refund or increase in refund. Now, can an updated result in increase of the refund? The answer is categorical, and I reiterate, an updated return cannot be filed in respect of an assessment year if it results in the refund or increases the refund due on the basis of an earlier return. So, it needs to be remembered that the legislature is not giving you an opportunity to carry forward something which you had forgotten or which you had deliberately omitted to disclose before. A related question is that can an updated return be filed if the tax liability in an updated return and earlier return is the same? If you literally read the clause B, then it restricts the filing of an updated return only when it has the effect of decreasing the total tax liability. An increase in tax liability is not a prerequisite to filing an updated return. Subsection 1 of Section 140B contains provision for tax computation on the updated return if an earlier return was not filed. Subsection 2 of Section 140B contains provisions of tax exemption on the updated return if an earlier return was filed. Both the subsection use the term and tax is payable in the context that whereas the tax is payable based on the updated return, the assessee shall be liable to pay such tax together with the interest, fees, and additional tax. There can be a situation where no tax is payable on the updated return on the basis of the literal reading of the clauses as well as the computation part in Section 145B. It can be argued that an updated return can be filed even in cases where the tax liability on an updated return is the same as an earlier return. On the other hand, if we read Section 139(9), which treats a return as defective return if the conditions specified in the explanation are not specified, then the Finance Act 2022 has inserted a new clause to this explanation. And this new clause provides that if an assessee cannot provide proof of tax payment and if no tax is payable on an updated return, then it shall be considered a defective return. So here is a situation which requires a clarification to avoid future litigation. One clause of the amended provisions says that yes, if the tax calculations in the original return and the updated return are the same, you may be entitled to file an updated return. However, the machinery provisions are saying that if you do not give the proof of additional tax payment, your tax return is defective. So if CBDT can step in here, clear this confusion, then unnecessary litigation on this issue would be avoided. Now let us consider the updated return in the cases where search actions have been initiated or surveys have been conducted. Now, where a search has been initiated against a person under Section 132 of the Act, he shall not be eligible to file an updated return for the assessment year relevant to the previous year in which such search is initiated and any assessment year preceding such assessment year. Now, when is a search considered to be initiated? Now, the Income Tax Department is required to take various steps before entering into any premise or place of a person when search is to be considered as initiated. The Income Tax Department must possess information, it must form a reason to believe, it must take an authorization from the specified authorities, there must be an issuance of a warrant, and that warrant must be shown at the time of entering the premises of a person, or it may be the residence or it may be the business premises of the person. Based on the various High Court decisions, it can be concluded that a search is considered to be initiated when it is carried out at the premises of the person, even if no incriminating material is found during a search or seizure action. The person shall not be able to file an updated return. Now, if a person wants to file an updated return, he can do so until the search is initiated at his premises. Now, if a person gets a summon to produce the books of account or the other document and he realizes that he had failed to disclose any income in his return of income, he can update his return and disclose such income because issuing of summons under Section 131 does not amount to initiation of a search. Now, let's consider a case where books of account or assets or other documents or any assets, what in the Income Tax Act would we call the requisitioned assets, are requisitioned under Section 132A in the case of a person. Even in this case, such a person shall not be eligible to file an updated return for the assessment year relevant to the previous year in which requisition under Section 132A has been made or any assessment year preceding such assessment year. In absence of any time limit to deliver the requisitioned assets, there could be a huge gap between the date of requisition is made and the date on which the requisition assets are delivered to the requisitioning officer. Can a person file an updated return in between such date? Now, Clause A to the second proviso of Section 139A states that a person shall not be eligible to file an updated return if assets, books of account, or other documents are requisitioned in his case. The Allahabad High Court, in the case of Chandra Prakash Agarwal versus ACIT, reported in 287 ITR page 172, held that one of the meanings which can be assigned to the word requisition is taking actual possession of all items. It means the income tax authority must be in actual possession of the requisitioned asset. Thus, a person can file an updated return till the requisitioned assets are handed over by the other authorities to the income tax authorities. Now, what is the position in a survey? Where a survey has been conducted under Section 133A, and mind you, the Act specifies it is the survey other than surveys under subsection 2A of 133A, which deal with TDS and TCS surveys. So, where a survey has been conducted and it is not a survey under TDS and TCS, then the taxpayer cannot file an updated return. But even if a survey is conducted, but it is a survey for the purposes of TDS and for TCS, and it is covered under subsection 2A of section 133A, then an updated return can be filed. Now, a related question is, where documents or assets seized or requisitioned in case of a person belong to the assessee, then can such a person file an updated return? Now, the amended provision read, a person shall not be eligible to file an updated return if a notice has been issued to him to the effect that any money, bullion, or jewelry which has been seized or requisitioned under section 130 or 132A in the case of any other person belongs to him, or any books of documents which are seized under 132 or 132A in the case of other person pertain to this person, pertain to information relating to this person, then such a person is barred from filing an updated return. So if a notice is not issued to the assessee, he can file an updated return. However, once a notice has been issued to the assessee that he is actually the beneficial owner or the actual owner of those assets or those documents which has been seized in the other case, then he will not be entitled to file an updated return. A scenario will clarify this position. A search was carried out against Mr. A on 20th of February 2022. During search, the assessing officer found some assets or document belonging to Mr. X, and consequently a notice to this effect is issued to Mr. X under section 148 on 15th of March 2022, and the case is reopened for assessment year 2021, 21, 22, 2019 and 20. Now, suppose Mr. X gets an information about the search proceeding on Mr. A and the incriminating material found by the authorities which is against him. In that case, he can file the updated return for assessment year for which the incriminating documents or assets against him have been found before the notice is issued. In our case, before 15th of March 2022. However, once the notice is issued to him, then he is no longer eligible to file an updated return. Now, another issue which has been raised by some taxpayers is that what happens if I file a updated return? Can I revise my updated return again? So in this, the clause A of the third proviso to section 139 8A, according to me, makes it very clear that an updated return cannot be revised. So the next question which we need to consider is that as per clause B of the third proviso to section 139(8)(a), a person shall not be eligible to file an updated return of the year in which proceeding for assessment or reassessment or recomputation or revision is pending or has been completed. Now, the courts in number of cases have held that an intimation is not an assessment. So let's first be clear that where only an intimation under section 143 has been given to the taxpayer, then he is entitled to update his return. Similarly, if a taxpayer has been issued a notice only under 142(1), which is to make further inquiries, he is entitled to file a revised return. In the similar vein is the new provision of section 148(a), which provides that before issuing section 1 notice under section 148 for reopening of the assessment, the assessing officer is required in some ways to do a pre-verification. Then in all these scenarios, assessee would be able to file an updated return even if an inquiry is made or show cause notice has been issued under section 148(a), because as yet the proceedings of assessment or reassessments have not become pending in his case, neither have they been completed under the Income Tax Act.